What is considered payroll tax evasion? Have you ever wondered what payroll tax evasion really means? It's a serious issue that can have major consequences for employers. Payroll tax evasion happens when an employer intentionally avoids paying required taxes on employee wages. This includes federal income tax withholding, Social Security, and Medicare taxes. There are several ways this can occur. For example, an employer might fail to withhold taxes from employee paychecks. They might also not send the withheld taxes to the Internal Revenue Service or misclassify employees as independent contractors to dodge tax obligations. Understanding payroll tax evasion is particularly important if you are considering bankruptcy. Certain tax debts are treated differently based on how they were incurred. If an employer willfully evades payroll taxes, those debts typically cannot be discharged in bankruptcy. This means that, even after going through bankruptcy, the business or individual is still responsible for paying those taxes. Common practices that can lead to payroll tax evasion include misclassifying workers, paying employees in cash without reporting it, or not filing required payroll tax returns. These actions can trigger audits and investigations by the Internal Revenue Service. If the Internal Revenue Service finds evidence of willful evasion, penalties can include hefty fines and even criminal charges. From a bankruptcy standpoint, if an employer is accused of payroll tax evasion, the Internal Revenue Service can assess additional taxes at any time. These debts may not be eliminated through bankruptcy. However, if payroll taxes were not paid due to honest mistakes or lack of knowledge, those debts might be dischargeable under specific conditions. Meeting certain time requirements between the tax return due date and the bankruptcy filing is essential. For employers with unpaid payroll taxes, it is vital to determine whether the failure to pay was willful or not. Willful evasion leads to non-dischargeable debt, while non-willful failures may be dischargeable if certain legal conditions are met. Seeking legal advice is highly recommended to navigate these rules and understand your options. In summary, payroll tax evasion is a serious matter with significant legal and financial consequences, especially in the context of bankruptcy. Understanding the difference between willful and non-willful failure to pay payroll taxes is key for employers facing these challenges.